Uh, condense some of it. I usually try to condense some of it so it's like really digestible and put it into you know whatever stock that we're talking about is really itemized on YouTube. So you can just go straight to that time segment and look at what was being said. All right. So with that being said, we're entering in the this week. Remember, this is still the summertime. So the stock market is typically slower during the summertime. This is we're heading into July 19th. And one of the biggest things that we try to do is like, of course, we review last week's trades. We want to know how we did, what we did, and if we're taking notes, because the note taking will only get you better. And then it will help you look at what you did in the previous days or weeks, months, however long you've been trading. So you can get a real general idea of how you've been doing. As people who are in the, in their profession, whether it's in healthcare, whether it's in real estate, whether it's you know what other professions, legislation, lawyers, things like that. They all take notes. If you're a fitness trainer, you take notes. You want to take notes because you want to know how to get better, right? You want to know what you did, what you said, and how you approached it. So the next time that you come back, you say that you either got better or you probably got worse, and you have a different approach on how to make it better for yourself. So I always will harp on note taking, right? But before we get started, does anyone have any questions thus far about anything that I've said or the things that they've seen in the past weeks that they were unclear of or that they saw and was like, wow, this actually, made sense. I know, Grace, you've been, taking in notes. You've been really doing the background work to make sure that the stocks that you're checking out has been going in the direction that you wanted. I know that when we talked about Peloton, and we saw how well Peloton did at the time that we spoke. I think it was like $110, and then it spiked to $130. So I don't know if there's anything that you wanted to mention about any stock that you've been kind of watching.
Afternoon, everyone.
Not
Hello?
really. So,
Hello?
yes,
Can you hear me?
yes, I can hear you.
I'm sorry. Afternoon, everyone. Thank you for holding these sessions, Jermaine. I think that we should keep an eye on Moderna. These last 2-3 days, it spiked a good deal, and I think it because of the vaccines that they have coming out, or I shouldn't say vaccines coming out, but they've been they plan on applying their mRNA technology to some other diseases, but also
Yeah.
they're going to be added to the S&P sometime next week, I think. So I'm not sure if this is going to be a long-term play, but it's there might be some opportunities there, especially I think in the mornings. Definitely on Friday in the morning, it did a quick little run. So if anybody wants to try to time a scalp, I think that's what they're called, a scalp, just a quick in and out. And then throughout the day, you might be able to catch a range trade.
Moderna, I appreciate you even bringing that up because Moderna has been one of my favorites, right? And I know I have Instagram Live going on, so good afternoon everyone who was attending. So Moderna has been one of my favorites when it was actually at the $20 range, right? I remember last year, and I was saying exactly what you're saying, Leon, where when it comes to a stock like this, you'll have essentially a company that has a technology that makes sense, right? Because a lot of times you will have a lot of these biotech companies that do not make sense when it comes to what they are trying to promote, right? They'll come out with something and they say, oh, well, we're going to treat rare diseases. But when you start reading the background on the company, they don't really have a technology that will address those rare diseases. As Moderna, and if you see on your screen right now, I'm looking at Moderna, the chart, the long-term chart. It's been out since the end of 2019. And since then, it has it's ran from the 20s on up to $286. Right now, yes, it's quite overbought, right? Because anytime when it's overbought, if you're in the position, this is the time that you will look to sell. But based on the news that you mentioned, the one of the biggest news is that it is entering into the S&P. So when when a company starts going into the S&P, there is a type of recalibration that kind of happens with the stock because it has to match everything else within that index. But when that happens, just be mindful that there should be a pullback. So when you have that type of strong news, like when Tesla went into the S&P last year, or was it, no, the beginning of this year, I believe. It was either the beginning of this year or last year, November. I don't really remember. But when it went into the S&P, it did have a slight pullback prior to it going right back up again. So you're right, Leon. Maybe on Monday, this will pull back because of all the vaccine news dealing with the Delta variant. And this might actually affect Johnson & Johnson, who comes out with earnings this coming up week, actually on Wednesday on the pre-market, and Pfizer, who has been pushing for a secondary dose. So if we can go into Moderna just a little bit more, just so we can analyze the chart and we can just see what we're all seeing together, is that we saw that it made this clear breakout. Well, first and foremost, if you're on Instagram and if you want to see what I see, just tap onto my bio and you can see the Zoom link and then you can see what we're all looking at right now. But if you're looking at the chart itself, you'll see that there has been a particular breakout. First, it was at $192 a share, where you see this breakout right here. Because it kind of, and just to remind you, if you see stocks that starts to curl like this at all, that means that curl is starting to hit into resistance and it might downtrend. So this has been a very common thing where you will have the stock, it might spike a little bit, but it will curl. So it made these little hills. Those little hills would cause a downside, right? And anytime when a stock makes a new high, the rule is that we expect a pullback. It can continue making highs, but at the end of the day, we know that it should pull back at some point or another, allowing more supply to be restored into the stock so that we can create a stronger demand. And when that stronger demand starts to set in, then the stock can go higher, right? And that demand is based on volume, right? So if there's more volume into a stock, meaning that the volume from yesterday is a little slightly lesser than the volume that we're about to go into tomorrow or to the next day. If the volume continues to increase, then we know that the stock will go higher. That means the demand is going higher. But if the volume starts to get lower and starts to lessen, then we know that the stock price is going a little bit lower. So as we dive in a little bit deeper into Moderna, we see that we hit that resistance around 192, and it broke it around 190-ish or so. Then it broke that after it retraced, found support at about 150, 147, and then it retested and went back up, right? So this, anytime when we see a stock first make this support price, and this is a very clean chart. So I'm glad, Leon, that you brought this up. As clean as it is, you get the sense of how to apply all the technicals. So you can hold stocks for a longer term. So like Leon said, you can scalp it if you wanted to, based on the news. But if you were looking for something that was a little bit longer term, you will look at these technicals. You will see that the MACD kind of pulled back or crossed. And when the MACD crossed, meaning that there was a change in momentum, that also showed that the RSI was coming down from being overbought, right? So anytime when it gets overbought and pulls back, we look at these places for support. And we found support on Moderna right around 149. Once that 149, 150-ish price point was held, then we saw that it just traded sideways before it found more momentum, which it shifted right here on the MACD. It shifted, we see that the RSI was still above 50, right? It kind of dipped below 50 just for a day, and then it started to come back to 50. And 50 on the RSI is like that halfway line. That when you have 50 as a halfway line on RSI, it shows that it can either go bearish, which means the price goes down, or bullish, where the price goes up. It held 50, so it can go bullish. And since it went bullish, it went up, and the MACD confirmed it. The TTM Squeeze confirmed it, where the histograms not only went from red to yellow, but they also got smaller. The zero line turn was red, which means bearish. But once those yellow lines, those yellow histograms start to get smaller and smaller and smaller, it shows that there's more upside, right? So once we saw that it broke out that price above 189, it went to 255. We saw that it was overbought at 255 before it pulled back. And mind you, when it pulled back, as we look at these moving averages now, and these moving averages only suggest that this is just a calculation of this price based on this time chart. So this is the daily chart. So the daily chart shows that anytime when the stock is trading above this green line, that 5 EMA, is going to go higher. Anytime the stock starts trading below that green line, that means it's going to go lower and test the 20 SMA price, which is this teal line. The 20 SMA price, if the stock starts trading below that, then it will try to test, right? Either support, which we saw it did back here when it went, the momentum changed and it started to come down. It tried to come to the 200 SMA, but it didn't. Same thing over here. It tested the 20 SMA price, didn't trade below the 20 SMA price. So it held support right there about 189 and continued to trade higher. Now we're at this current state where the stock is trading above the 5 EMA. It did this nice gap up. And anytime when we have a gap up like this, especially when a stock that's overbought, and especially when you have histograms that are higher, right, that the histograms are a little bit longer, it shows that, hey, this stock could go a little bit higher if it wanted to, because the teal is a little bit longer. The green on the zero line is showing on the TTM Squeeze. So now it gives us a chance to go deeper into the smaller time frames, which is the 4-hour time frame. And on the 4-hour time frame, it still shows risky territory, even though it has good news behind it. You don't want to buy at the top. This is what happens where a lot of people, they will chase a stock anticipating long-term gain, but the short term, it shows that there's nothing but resistance. So here on the 4-hour time frame is showing that 289 is good enough resistance. The 1-hour time frame probably also shows that it's overbought, maybe. Yep, that is overbought. So it has to test this $280 price point. Once it tests that $280 price point, that's about $9 away from where it, well, $9 away from its high. It closed at 286, so that's about $6 away. So once we see that that $6 risk is being tested, and it kind of holds its support at 280-ish, maybe 279, right? Because we see the support price right here, right? If it holds that after some type of pullback, so it's not overbought this whole time, then it could possibly go higher, right? And I think it could go higher based off that news and the technology that they have, because I have been a big fan of this. Like I've said, Leon, before, I've spoken of this many a times, and people didn't believe me, and now we are in this phase where it's going to be one of those big time players where it will go against Amgen and Biogen, and show that their worth is much, much greater than what people are giving it credit for. So I would think to definitely keep this in mind as we're looking at it. And then maybe, like I said, if it does, it made a new high. So I expect it to start trading below the 200 SMA price. Anytime when a new high price is made on the intraday, and this is where I mentioned in the group before, where we talk about different risks. right? Where a stock price will come down after making a high. And once it comes down, because it made a high here, right? This was a high on, and this is the chart that we're looking at is 5 days. 5 days, each candlestick represents 2 minutes. So on the after hours on Thursday, it made a new high. Probably based on the same news that it was going to, that the technology and is heading into the S&P. After that new high is made, I expect it to come to the 200 SMA and trade below the 200 SMA price. It kind of held that support at 270-ish. Once that support was held, it bounced off of there and made a new high. Once that new high was made, couldn't go any higher, right? It came back down and it traded with the 200 SMA price now. So this would have been a possible clip, like Leon was saying, where it bounces and you could have gained $9 a share based on that bounce off the 200 SMA price. And this is what happened here. It went from the 279, 280, and to a newer high at 289. So expect the same thing. News comes out on Monday. More news, whatever it might be related to the S&P and whatever technology that they might be applying their mRNA technology to, starts trading below the 200 SMA price. Once it starts trading below the 200 SMA price, start looking to buy. Start looking for an entry point. Start looking to see that, hey, the RSI is oversold. When it's oversold, that's the time to buy. When it's overbought, that's the time to sell. And you can do that intraday and collect your intraday profits and be out with an extra 200, 300, however much you invest in on that day. And it literally might only take an hour, maybe 15, like this movement right here, from 274 to 288, that was roughly from 249, which 249 is like one of the best times to buy, right? Because the stock market, all the stocks are waking up. Everybody's waking up now, right? It's just like if you're getting up out of bed, you don't want to be bothered when you're waking up out of bed. This pre-market is when you're being bothered waking up out of bed. You're like, what the hell is going on? Stock market opens up, it starts to tank a little bit. But if you wait until about 245 just to see where the stock is at, based on what it did after it woke up, this happened all in a matter of minutes, 20 minutes. 20 minutes, you're out, right? So Leon, I'm not sure, what time you got in. Maybe you want to elaborate on that.
I was able to catch some profit on Friday, not Thursday.
Yes.
I'm not sure, right? I'm sure, was this Friday you were looking at?
Yeah, this is Friday right here where the cursor is.
And that was sometime, I would say, between open and 10:30. I don't remember exactly. I'm not taking notes the way I should be yet, but I plan on doing that. But it was within that, 45, 30 to, 1 hour window. It was definitely not after 10:30, 11 o'clock. That's for sure.
Yeah, because sometimes after 10, that's the stock, whatever the stocks have done during the day, well, within that first 30 minutes, it tends to pull back. So the mere fact that it tends to pull back, and it could have pulled back to just regular old support, right? But like I said, a new high was created here. Because that new high was created, it would test support, but it also will break down support. So if you were able to get in like around this 9:45 time frame and catch the rip. This is a dip and rip, dip, rip. If you catch that dip and rip during that time, you are in the money. So I would say congratulations on just catching that and witnessing how the stock can play during the time of day. Is there anything that you want to, is there anything about Moderna else that you want to mention?
No, sir. I mean, long term, it's a beautiful company. Like you said, I totally agree with you on all of their potential abilities. I was just following the news, some chatter, the news, about them being, they're moving into the S&P, and the market, it was market sentiment, and I just was able to, catch a couple of dollars. The dollar amount was not that large, but it was 20% of of my total purchase price. So that I was happy about that.
Yeah, if you can catch a 20% gain on the day, I know sometimes we look at dollar signs, right? But we see that even Moderna, it was up 10% on the day, right? So if whatever you invest in, if you are able to capture 5, 10, 15, 20% plus, that's an awesome day. Because and Leon, about Tony Zhang. I think his last name is Zhang. Tony from CNBC options trade options. I forgot.
Yes.
Yeah. So he's an amazing dude, right? But he will always share about this game in the stock market is always about percentages, right? It's a game of percentages. Yeah, you can earn 300, 400, 1,500 on a position, right? But over the long term, you want the percentages to always be more than 5%, at least 10% every time when you enter into a position. And if you're able to get 5, 10, and even more, don't even think about how much money that you earn. Just think of how much that percentage gain that you got after you close out the trade. Because while you're in the trade, do not look, I'm telling you right now, do not look at your profit loss while you're in the trade. Look at where your support resistance lines are, look at your plan, and from there, start implementing the technicals, and say, okay, the MACD, RSI, the TTM Squeeze, they are all lining up. Because they're all lining up, this is good. These are in my favor. All right, now I'm going to sell because it's overbought. And it looked like you did that because it was overbought, Leon. It was overbought right here at 10:06. Right? So this is the quintessential clean chart. MRNA gives you one of the best clean charts that you could ever imagine right now. So I would say that is an amazing trade that you made. Are there any other questions about Moderna that anyone wants to highlight on? All right. Let's see. So I'm trying to think what people have been trading, what people have been looking at, particularly during these down days, right? Because some of these days haven't been, the best of days. If we let's look at the Dow, DJI. We'll look at the Dow. The Dow has, it made a new high. All these indexes, really, the S&P, the Dow, the NASDAQ, they all have made new highs, right? Now, remind you, the Dow is comprised of the 30 best companies or large cap companies in America. So when you have the Dow start making a new high, I'm not making this up. Once a new high is created, it's going to come below the 200 SMA price. Once the stock comes below the 200 SMA price, you have two options. One, see if it holds support, right? And then two, if that support is held, see if you want to buy it based on a plan that you have created, right? So let's say that you have your portfolio and you have, you want to add a bigger position in the Dow. You say, hey, it's holding the support now finally at 10:30, right? Can't make this up. It's holding support at 10:30. Been holding support, and it was holding support. Once the stock starts trading towards the 200 SMA price, we want the moving averages to come with it. Once the 5 EMA and the 20 SMA comes with the stock price and starts trading above the 200 SMA price, then we have an opportunity for the stock price to go higher. But sometimes that doesn't happen, right? Sometimes it does exactly what the Dow did, right? where it found this resistance at the 200 SMA price. Right? So this is a point where the dip and rip it can fail on you, but if you have a plan, recognizing that, hey, this stock is hitting resistance at this 34,900-ish area based off of this 34,840 area, this take the gain, because you see that now there might be some pullback, and the MACD confirms it with the cross. The MACD crosses, showing that there's a change in momentum. And then, it wasn't even overbought, right? The RSI didn't even get a chance to be overbought. But if we zoom in just a little bit and we see right here, if you can follow the cursor, if you see right here that even on the TTM squeeze, that once these histograms on the teal histograms get high and they don't go any higher, they just kind of like level off and it starts turning blue, and you see the darker blue is starting to get smaller and smaller, coming towards a zero line, then we know that there's an opportunity for the stock price to go lower. And that's what happened here. And we can continue to use the Wyckoff method to recognize when a stock is going high versus when a stock is going low. When a stock goes high and, after it's been trading sideways, that's phase one, right? It's been trading sideways, phase one. Let me see if I can if I can show you on the intraday chart for the Dow. Maybe okay, so let's, even though the Dow is kind of chopping, we'll go to a stock where you can kind of see that. But let's say that, okay, on Thursday, we see that the Dow kind of just found this resistance right here, right? This resistance is around 34,978. So it wants to go to 35,000. And it quite can't. So it kept on hitting resistance before it actually fell down, right? And when it fell down, this is where phase four, right? The decline starts to begin. So the decline happened here until it found some support, and it found support here. And we can go back into time and figure out where that support price was. We see back on Wednesday. This is Wednesday. Now back on Wednesday, that this was previous support, right? That previous support was held. Right here, it did a fake out breakdown, where it faked out breaking down before bouncing. So this is kind of still support, right? And then we see that support was held right here. So once that support price is being held, we can tell that right now that's phase one. So phase one is starting to trade a little bit sideways, and then we start seeing phase two starting to incrementally go higher and higher, right? Until the market opened, where it spiked up. And we'll see a lot of stocks do this spike, particularly they'll do it in the pre-market. This stock did the spike once the market opened, and then it kind of got choppy here. This is phase three, right? And mind you, it's a lot of liquidity that's coming in here. There's a lot of volume. It's just kind of this, it's kind of making the market move in a fashion. All right, so now, since it's so choppy, this phase three happens where it can't break any higher. And we confirmed that by looking in the past. Where was the previous resistance? Previous resistance was right here on pre-market, well, when the market opened on Wednesday, once again, back at 35,000. So once that 35,000 was hit and it couldn't go any higher, it went back to phase four, right? So phase three, phase four, back to phase one, we would think, and thinking that, oh, okay, this is phase one, it's going to go up higher, back to phase two, and then possibly retest resistance. Well, that didn't happen, and it continued to come down. And this could be just a continuation of what was said during the Fed speech. I think I said Tuesday and Wednesday. I think it was actually Wednesday and Thursday. So I was wrong on the days. So when the federal chair speaks, we have to take pause. Don't even enter money into the market. I was looking on Wednesday, left it alone. Looking on Thursday, I left it alone. And then on Friday, I was expecting some type of bounce. I was like, okay, something's going to happen where the stock market will go higher. It didn't do it. It kind of just pulled back. So even though it pulled back, it stayed below the 200 SMA price. That's what I want to harp on. When a new high is made, all that to say, when a new high is made, and it wants to retest the 200 SMA price, particularly if it cannot hold support. It went to the 200 SMA price. You know, previous support was right around here at this 34,980-ish. It tried, came down, and then once it came down, it went to its previous support, couldn't hold that, so it went down lower, right? And this is what we expect to see on every stock. So, so let's go in a little bit, right? Let's see what other stocks there are that we could look at and really start to identify, hey, maybe the stock will do something that we want it to do. Does anyone have any stock in mind that they're thinking about entering in on? I can share the ones that I did this past week with NMMD and Johnson & Johnson, because I really do believe in Johnson & Johnson. I'm a big fan. Anyone have any stock that they're thinking about, that they're having interest in, that they're looking at? I know when we entered the conversation, I was talking with, I mentioned what Grace said about Peloton, what we mentioned about Peloton. Peloton was one of my favorites going into this week based off of what we just talked about. So if we look at, you always go to the long-term chart first, always long-term chart. Once you're in the long-term chart, then you get a better sense of what the stock actually looks like. The stock could look like anything on the intraday, but when you look at the long-term chart, you're like, okay, what's really happening here? So long-term, I think when we're looking at it, Grace, we're looking at it right here. No, this is June, sorry, we're in July. We're looking at it right around here when it was entering into phase 3, right? We saw that there was this technical bullish engulfing candlestick pattern, which tends to happen, right? Once we have this bullish engulfing candlestick pattern, we tend to believe, right, that the stock can go higher, right? But that didn't happen. It found resistance towards the end of June. So heading into July, we see that it was trading sideways. So what phase is this? Do you remember what phase this is that we just mentioned? What, referencing the Wyckoff phase? Anybody, you can type it in the chat if you wish. But what phase is? Let me zoom in a little bit. We see that the strong green candlestick happened here, and then we saw some little bit of uptrend. So what phase right here did Peloton enter into? Anybody?
Is that consolidation?
This is consolidation, correct. Consolidation phase 3, right? So even though it didn't break out higher like we expected, right? Because this is a green indecision candlestick that happened here. Even though it didn't break out like we expected, it's good to recognize where you are in the long-term chart based on the Wyckoff method. So it gives you a better chance to assess your risk reward. Because if you would have bought in on this day, you're like, like me, I look for this pattern. And I said, okay, good. We have some momentum. It is about to enter overbought, and the histograms are teal, right? So these are good indicators. Even though that the zero line is red, these are really good indicators. And then the zero line became green here. That means there's a lot of buying that's happening. But at the same time, we start looking at the momentum. Once one of these technical indicators conflict, then it makes it kind of harder. Kind of like, it's like one of those things where it decreases your potential of the stock going according to your plan, right? So if you have a plan saying that, okay, this bullish engulfing candlestick is going to happen, so there should be a gap up or at least some type of upside, and you know, you recognize that this is an indecision candlestick. You're like, hold on, let me just wait. Even though it's green, let me wait one day, right? Let me not overstep, because we see what happened the very next day. It turned red. And then the red candlestick just got thicker, right? And typically on a blunted candlestick like this, it doesn't go lower, right? It doesn't go any lower, but insider says that there was some news happening, and that's why it went lower on, you know, July 2nd. And that could be because, you know, things are reopening. So people are not working out at home. People are not thinking about, hey, I need to be in this stock now, because people are going to go to Planet Fitness. People are going to go to their Equinox, New York Sports Club, LA Fitness, whatever it is that they work out at. You know, they're going to go to those places and start to work out there. So now we start to see this phase 3 start to get into play, right? But on July 6th, right, and let me pull up my notes so I can share it with you. On July 6th, no, on July 7th, actually, I bought Peloton. I bought the contracts. It was 305 contracts, 305. I bought the 130 calls at $3.05, right? And I bought it at 942. And when I bought it at 942, I was like, okay, this stock should go a little bit better. Right? I was like, oh, okay, this should do something in my favor. And let me actually share my notes with you so you can see what I'm looking at, right? Because I was really against the narrative that people were going to put their Pelotons away and not use it ever, because it has created an ecosystem like Apple, right? So I'm like, how are they just going to put this away all of a sudden and never ever use it? So I did trade it a couple of times on the 7th and the 8th. On the 7th, I did it for a day trade. And on the 8th, I did it for a day trade, right? So let's tap into these, right? I bought it on July 7th at 941, and then I sold it same day at 1002, $4 contract. So as we go back to the actual chart itself. So on July 7th, I look at July 7th, and we see what it did, right? We see that it, even though this, I was waiting for this green candlestick, right? Because it had 3 consecutive red days. It's also something else, right? We're looking at higher highs and higher lows. I know these are little terms that I'm trying to throw at you because it's a lot to put in at one time. So, you know, we're looking at higher highs. So I saw that there was a higher low that was created over here after support was made. And then we have, after these 3 candlesticks was created, we see that support was held. So I said, okay, you know, going into July 7th, maybe I'll put in a trade. So let's look at how many days I can go back. We'll look at it from the 1 hour chart because, oh no, I think I could do 30 days. I'm sorry. Let me go back. Yes, 2 minutes, 30 days. Where are we at? 2 minutes, 5 days. Let us do one of these. Oops, no, that's not it. I'm trying to extend the time frame so we get more than just the 5 days. It's 30 minutes, 2 minutes. Let's go to 5 days, 30 days. Add, apply. Okay. So now we go 2 minutes, 30 days. Right? So with this 2 minutes in the past 30 days, we'll get a better sense of how, I'm trying to zoom out a little bit, sorry. We'll get a better sense of how I actually, you know, what the chart looked like intraday, right? Because I could show you and tell you, yeah, this is how I trade and this is what it looked like, but I want you to see what it looks like actual intraday. So we're here on, oops, went too far. This June 28th, 29th. That's the 6th, 7th. Okay. So this day right here, this is the 6th, right? So I said, okay, I want to get in, right? And really, I wanted to get in on the 6th, but I was really being scared. I was being chicken shit, right? Sometimes I'm scared to trade too, right? Like, because you don't really know what can happen, right? Particularly for a stock that wants to make a new intraday high. So I saw this on the day before on the 6th, and I said, okay, going into the next day, I forgot what day this was. This was Wednesday. So Tuesday going into Wednesday, I said, all right, I want to get into this stock. At 9:45, right? Well, actually, market open, it spiked hard, right? Strong spike. It was already making moves pre-market. So I was waiting for the market to open. I don't buy at 9:30 just because, you can have a fake out and then it pulls back. So I said, let me wait until 9:45. 9:45 comes, let's zoom in a bit. 9:45 comes and you see it's trading sideways, right? And not only is it trading sideways, right? Here is where I end up buying. Well, this is 2 minutes. So I got to remember each candlestick represents 2 minutes. So between this time and this time, I bought in my position, mainly because after this strong spike at 9:32, if the stock was trading above the 5 EMA, even though it was overbought, I still knew I had upside, right? But the biggest thing I also knew is that once this stock makes this new high, you better get ready to sell. And that's what happened. Right around here, that's when I sold. I think I said 10:02. So right here, I was like, oh, okay, it's coming down. Let me sell. And that's what happened. It came down, right? I am not making this up. If I could tell you that the stock, every time it makes a new high, it does not come down to the 200 SMA, I would tell you. But every time a stock makes a new high, it wants to come back down to SMA price, a 200 SMA, and that's what it did. And this is why using these technical indicators are helpful. Even though they're lagging, it still gives you a chance to identify where the stock price could actually go. If it pulls all the way back down, granted, I bought it right around here. I don't want to be holding it down here. Now you're just holding and hoping. Because you know what can happen. You know the fact that it can make a new high. And then once it makes that new high, once you see this new high bubble starts popping up, take your profits. Whether it's 2%, 1%, 0%. Just know that, hey, I got in, I bought at the top, I was wrong. Cut your position, wait for it to pull back. And then once it pulls back, start looking to see where the stock price is going to be. And granted, after the 7th, it started to trade below the 200 SMA price, and it did. It traded below the 200 SMA price for a bit, right? So what happened? I ended up buying this the very next day. I bought it on I actually bought it a little bit sooner than I typically would want to. I bought contracts at $1.20 and $1.07 for an average price at $1.14 on July 8th, right? So right around here, I was feeling myself from the day before, right? I was like, oh, I did well the day before. Let me see what on this stock, right? I don't want to be jumping from stock to stock sometimes. Sometimes I just want to stay on one consistent stock because I know its behavior, I know its pattern, right? So that's what I ended up doing. So I ended up buying right around here, thinking that the stock was going to go and retest the 200 SMA price, because that's what I really wanted. I wanted the stock to not only come to the 200 SMA price, but to sell, be out, and then just collect my profits within the first 30 minutes. Well, as you can tell, it didn't do that, right? It didn't even come to the resistance price that I thought it was going to come to. So it pulled back, held support. That's the best thing it could do, was hold the support at $118.88. Held that support, and then just traded with the 200 SMA price. And then this is where it spiked. right? It spiked. Sometimes this happens where before the stock price gets to the 200 SMA price, what happens is that it will spike beforehand. And I think I'll show you MOXC. It did kind of similar to that. MOXC kind of did that, where it was trading below the 200 SMA price, and you had a little spike when it was under the 200 SMA price. And it did that here with Peloton, where it spiked. And then not only did the moving averages start trading above the 200 SMA price, but it went a little bit higher, right? And because it went higher, I ended up selling, I think during the lunchtime, I sold this. I sold at 1:52. The time was 1:52 p.m. So right after lunch, right before the 2 p.m. time, I ended up selling it. And as we go a little bit further in, you see right before 2, I sold right around here, just because I was like, it's doing this curl, right? And mind you, I led with this at the very beginning with Moderna. Once it starts doing these curls, I'm like, okay, is it coming to resistance, which was intraday resistance, was right around here, this 124, 125 price. And I said, you know what? I don't want to risk it. Let me just take my profits, did exceptionally well. Let me take my profits, not change my plan. Because sometimes that happens with us, is that we come in with a plan and then we start seeing the stock price going higher and higher. And we're like, oh yeah, I'm in the money now. But just follow your plan, because once the stock price starts going against you, then you're gonna be like, oh shit, my price is not being hit anymore. And granted, the stock did go higher during the day, on that Wednesday. It did go a little bit higher, but I still took my profits and I was out, right? It went back to previous intraday resistance. This was intraday resistance, right? When it made that previous spike back at 11 a.m. Made the spike at 11 a.m., tried retesting it, because you'll get that when the stock is trading below the 200 SMA price, and the stock price, the 5 EMA, and the SMA 20 SMA price all start trading above the 200 SMA price, right? Those are 3 different prices I just mentioned: the 5 EMA, the 20 SMA, and the stock price. Once they all start trading above the 200 SMA price, they're going to come back to the previous intraday resistance. If it can't break that price, like Peloton did, started retracing, then that's when you should start thinking to yourself if selling is the best option. And sometimes just taking your profits and enjoying the rest of your day is the best option, right? Later on, the stock, I think it went a little bit higher. Actually, I don't know. What did it do? No, it retested previous resistance on the previous day, and then the very next day it collapsed. It couldn't break it. All right. Once you see it starts testing it, it tried testing it here, right? Someone bought 100 shares at $124, right? Thinking maybe the stock price was going to go up higher, and it didn't. It was only 100 shares. What's that 100 shares is going to do against the whole total addressable market, right? TAM, TAM, total addressable market. The total addressable market said that this stock price needs to go down lower, which it did. I thought about shorting and I didn't. And I left it alone. Now it continued to trade below the 200 SMA price for quite a couple of days. Right now, I want to re-enter on Peloton based on that ecosystem. I'm all about its ecosystem, right? And granted, there are some bears that are trying to push the price down because they're saying that the stock already did what it needed to do, but the opportunity for the stock price to go up higher is there based on its ecosystem. And if this ecosystem continues to go stronger, heading into the winter months, I'm not talking about the summer months, come on into the winter months. People are going to end up staying at home during the winter time because there's going to be a resurgence of coronaviruses, right? everyone's talking about Delta virus. So I'm thinking, hey, someone who works out, someone who does yoga, someone who likes lifting weights and all that stuff, if I don't feel like going home, I'm going to the gym and I want to stay home, Peloton might actually be a reason, when October, November, December starts hitting around, January starts hitting around, for me to be a long time holder into this stock. But once again, when we look at the long-term chart right now, we see that it's trading below the 200 SMA price, right? That 200 SMA price is 120. It's holding support at 110. I just needed to go a little bit higher. The momentum has shifted. The bears are all trying to drive the price down. If I can do maybe a day trade with this, maybe I will. But I really do believe that this stock price has more opportunity, right? Especially since it just left phase 3, like Leon said, went to phase 4. So maybe it's still in phase 4. Maybe it might come down to $98 again, right? Which is previous support. If it drops $10 a share, best believe you can short this and watch it go down, right? So this would be something that I'm watching on Monday to see if this is a short, like a shortable trade. Like I might do some puts on it and just catch it on the downside since it is trading below the 200 SMA price on the daily chart. Or if it bounces and starts trading towards the 200 SMA price, start looking at what intraday price do I want to get in on. So that'll be something that we can definitely look at. But this is Peloton, right? And hopefully this makes sense. I'm trying to show you how to identify dip and rips, right? Once that new intraday high has been made, it's coming below the 200 SMA price. And it will trade below the 200 SMA price throughout the whole day until maybe about 2 p.m., maybe 2:30, when it starts looking to trade above the 200 intraday price, right? Because all these moving averages are based on their time frame. So if you're looking at the moving average on the daily chart, that's the moving average on the daily chart. If you're looking at a 4-hour chart, that's the moving average on the 4-hour chart. And then the time frames and the moving averages get more truncated as you get to smaller and smaller time frames. Does that make sense to everybody? Does anyone have any questions? Anybody? Questions? So if you don't have any questions, I'll just continue moving on with going back to Moderna with Johnson & Johnson, right? So we have these vaccines, Johnson & Johnson, Pfizer, Moderna, these AstraZeneca, right? Which is like one that I'm not even, what is it, AZN, I think it is. Yeah, AZN. I'm not even really like paying it any mind, but I probably should at some point, right? But right now, AstraZeneca is not one that I particularly am quite fond of. And as you can even tell, look, it's coming down. It's going to come down. It'll probably come to being oversold at one point. When it's oversold, maybe it's at $53, but right now, that's not something that I'm looking at. Definitely looking at Johnson & Johnson. So Johnson & Johnson, as you can already tell, I have a target ready and willing to go. Looking at it to hold this support at 167.36. That's where my target price is. If it holds this support, then maybe it will retest this resistance at 170, 171, 172 or so. The previous high was 173. So if we look back in the time, once again, back in January, we see that January 26th, it made its high. Once it made its high, right? Usually this type of candlestick shows that there might be some type of support right there, but it made its high, trading above the 5 EMA, right? Even though it made its new high, it had to pull back. And it pulled back. It did bounce, right? It had consecutive days where, the red candlesticks were there, held support, but once it bounced, it bounced where it went from 160 to 168, 170 maybe, 167, 160. So that's a $7 bounce, right? Even that you can consider a dip and rip, right? But once that happened, it was trying to test previous resistance. It came all the way back down, testing the 200 SMA price. It's going to test the 200 SMA price. That's what it does. Once it tests the 200 SMA price, right? After it broke support, right? Because we mentioned like if support is not held, it's going to test it. It's going to test it being the 200 SMA price. So once it did that, it did bounce, right? Right. So that was a nice bounce from 152 to 166, right? So if you're looking at this and you're looking at the technicals and you're saying, okay, you're oversold. Well, it was kind of oversold right here, right? Always look at the RSI. If you can find an RSI where it's near 30, think of it as that being the stock that you say, okay, if I want to buy this, this is a good stock to buy. If you end up buying a stock that's overbought, really start considering that, hey, this is going to be positioned to sell because people are going to look to short it. People are going to look to push the price down, which happened, right? So now people are looking to buy it because it's near oversold. So once it was oversold, the very next day, it was a strong green candlestick, right? It even engulfed the previous red day. And then once that happened, it started trading above the 5 EMA price. And as we tend to say, once it starts trading above the 5 EMA price, it wants to go higher. Here, it wanted to trade towards the 20 SMA price. And mind you, there was resistance before it started trading above the 200 SMA price. And then once the 200 SMA price, once the 20 SMA price, I'm sorry, I think I said this teal line was a 200, when it's the 20. Right now, I didn't say that previously, I'm saying it right now, right? So once the 20, this 20 SMA price, the teal line, once it started trading above it, the stock price did go a little bit higher. But what did it do? It tested previous resistance. It's going to continue testing that previous resistance all the time. And that's what happened. It came back down, test previous resistance, came back down. Test. But if you can see that every time it tested that previous resistance, the lows got higher. We got higher lows here. Higher low, higher low, higher low, until it got here. When it got here, it really started to test this previous high. It started to find more resistance again where the momentum shifted. And we see that it curled, right? We see this whole curling action. So if you're in a stock and you start seeing, your resistance price getting hit, and it starts curling, and I'm not talking about the sport, which is in the Olympics, but, Winter Olympics, but it starts curling, then you know that it's going to pull back. And then once it starts pulling back, you start looking, okay, is it making higher highs? Is it higher lows? Or is it holding support? If it holds support, which it did at 160, does it have an opportunity to retest the 200 SMA price? So based on the technicals, we see that the RSI wasn't oversold, right? And if we look in the previous history of the stock, it never really quite goes oversold, right? At least in recent history, right? Every time it came back down, it was like, we just kind of tap it. We kind of not. We're kind of near it, right? So you use that also as something that you can say as something that you would use as an indicator to say, well, and when you're taking your notes, in the past, it quite really didn't go oversold. In the past, it quite didn't really go overbought, which it never really did. Just kind of did this like snake-like action. Really taking the characteristics of the stock price will help you, right? Once you take in the characteristics. And that can only happen the night before. So if you have, in 30 minutes to an hour a night before, and you really assess the characteristics of the stock, it will give you a better heads up of what you want to do for the next day, for the upcoming day. Mind you, I don't have a position in this right now, but looking at this and it's possible, like, look, it's holding 162, or 160 as support. Maybe I could have bought this at 160, right? Particularly because it held it. The MACD, even though it went below the zero line, you could tell that, well, the RSI didn't go over or sold either, but you can also tell that the TTM squeeze, the histograms were getting smaller. As the histograms get smaller, you want to start identifying, well, where is it in relation to the RSI? Did the MACD cross? And then next, did the moving averages cross? Because oftentimes when the moving averages cross with the MACD, it can give you an exponential upside. It didn't really do that here to just kind of retest previous resistance, but even though it didn't really break that previous resistance, it still showed that there was some upside from when the moving averages and the MACD crossed, right? So from 163 to about 170, $7 of upside, right? So, and this is Johnson & Johnson until it came up with this scathing report. Now, mind you, I did buy this. I did end up buying it on July 14th. And I said, okay, actually, what time did I buy it? Actually, so I could give you the full range. So I did buy this on July 14th at 1:55 p.m. Now, mind you, when I typically buy a stock heading into the closing of that day, I typically buy around 2:30. If it looks like it's going in my favor, if the stars line up. But if it doesn't do it around 2:30, then around 3:30, that's when I'm looking, because at 3 p.m., that's when the bond market closes. The bonds have been relatively low, so it hasn't really affected the market, on the downside as much. But right now, inflation worries have been affecting the market, so that has been driving stocks down a little bit more than the bond. So since we have the bond, I say, since we have the bond not really affecting things, I said, oh, okay, well, what I'll end up doing is that I'll buy this stock, and I bought contracts at $1.43, and I say, as Pfizer, let me share you my notes with this. Now we're looking at Pfizer, Johnson & Johnson, and I said, you know what? When I originally bought it, I ended up selling it the very next day for some upside. I think I could have held it, but it doesn't matter. I want to focus on my loss. So the loss on this was that I said, hey, Pfizer tries, right? Pfizer tries to force a new vaccine into the market. Most healthcare officials state there's no need for another vaccine. This is the FDA, right? So earnings is next Wednesday. I'm already planning ahead to this upcoming Wednesday, and the all-time high is $173.65. I end up selling this at a dollar per contract, right? And it was based on the news that was released after hours. They had news, and I'm going to tell you why this is the news, as damaging as it could be. It's not really. And the main reason why is that even though it was a recall because on their Aveeno and Neutrogena products having benzene, which is a cancerous product on there, I did hold it way too long, thinking that the report wasn't that harsh. I was like, oh, that's not that bad. I sold it at $1, so I lost 55 cents on it. So, I always say 55 cents, that's not something you really want to lose, like 20 cents, 15 cents. That's usually what I go with. But I was like, the news is not that bad. Like, that's what I just kept on telling myself. All right, well, 43 cents is what I lost. And I kept on saying the news is not that bad. It shouldn't be that damaging, but I ended up selling it. And what ended up happening is the fact that when they came out with that news, you'll have companies that will come out with news in the pre-market at after hours, dragging the stock price down, particularly before earnings, right? Because they want insiders to get a better price than up here, right? If you know anything about technicals, as I zoom in, right, and we're about to use it as an example. This is Previous example of this is when the stock price on the technical back here, back in June 25th, you see this little hammerhead candlestick. Anytime you see a hammerhead candlestick like this, typically a stock price jumps up. You see a similar hammerhead candlestick like this. And it kind of just went up higher, especially when it was trading above the 5 EMA price. This was a hammerhead candlestick, but yeah, it was overbought on this day. So yeah, it kind of did pull back. But you know, when it pulled back, it was still trading above the 5 EMA price. So there would have been no reason to sell, as it was still trading above the 5 EMA and it went higher on earnings, right? So now we're fast forwarding, right? It did come out with earnings again, and it did well on earnings, right? It tends to do well on earnings, as we can tell, right? So now we fast forward. I'm looking at it right here, and I'm saying, oh yeah, we have this hammerhead candlestick, right? Kind of similar to like right over here, had a hammerhead, and it was trying to go up higher, right? All the technicals was behind it. Everything was behind it. Even the TTM squeeze was behind it with a strong, you know, this histogram was higher than this histogram, right? So I'm thinking, okay, this is good. It's testing resistance. This resistance is being tested right here, right? So it should go higher. After hours comes out, news, let's go in on the day. The news comes out after hours, the stock price plummets, right? And I remember I was out on dinner. I was eating dinner with one of my frat brothers. It was his birthday. I think cancers, as a zodiac sign Cancer, it's required that you celebrate your birthday the whole month. FYI, I don't know if you know that, but that's at least my feeling. So based on when I was at dinner, and I was just like, yeah, you know, I feel like Johnson & Johnson should do well, right? Because it's going to retest its previous high, which it was trying to do going into the close. The news came out and it pulled the stock price down, all the way down. And this is after it already made its high, pulled back, traded below the 200 SMA price, came in unison, right? Came in unison with the 200 SMA price. All the moving averages are above, the stock price are above the 200 SMA price. It went up higher. Yeah, it pulled back a little bit, but even after that pullback, it still was trading higher, right? So I ended up buying like, I think it was 155 when I bought it, when I said. So I bought it after that pullback, right? I said, okay, great. I'm going to get some, right? Mind you, if you're watching a stock, sometimes you have to watch it like a hawk, or you put in these markers, right? You put in a target price. You say, okay, I want to see it get to this price. If it gets to that price, then I should buy it, right? Or sell it, or whatever your plan is. So I said, great, it pulled back. I'm going to get it at a really good price. So I got it right around here, thinking that this is going to be awesome, right? So it went up higher, and I'm thinking I'm up going into the next day. And then after hours hits, they come out with the scathing news report that it brings the stock price down, right? And it trades right around 168 for the rest of the day. And I was really thinking that, oh, this is going to hold, and it didn't hold, and even held below that 200 SMA price going into Friday, right? So I'm anticipating that, you know, that this stock is either going to on Monday bounce, right? Let's go back to the long-term chart. On Monday, the stock is going to bounce off the 20 SMA price. I remember we say that anytime the stock is trading below the 5 EMA, once it's trading below the 5 EMA, it's going to start testing the 20 SMA price. Sometimes it's just good just to say it over and over again so it sticks. So once it starts trading on the daily chart, right? Once it starts hitting this the 20 SMA price, this teal line, which the price is $166.46. If it tests that price, then typically, you know, it might bounce. But if it doesn't bounce, then we know it's going to go lower, right? But what we do know based off of history is that in this past, that in at least the past two earnings, that it has done well during earnings. And that could be because of the vaccine. It could be because of other Johnson and Johnson products, right? Whatever the case may be behind it, it has done well the past two earnings. And they have dividends, which I think is amazing, right? $1.06 on dividends. Remind you, if you do buy option contracts, the dividends don't apply. So, yeah, this is one that I would definitely love to buy shares in, but I also want to have option contracts on there just so I can be able to maximize my upside gain. So, I'm anticipating that even though it didn't do this on Friday with Moderna, because Moderna did very well on Friday, I'm anticipating that all the vaccines will continue to do well, but Moderna will pull back. Johnson and Johnson should pull back, and then maybe even Pfizer should pull back. But I know it's been doing well the past couple. Yep, it's been doing well the past couple of days. So it's been trading above the 5 EMA. We see this bullish engulfing candlestick: green, red, green. It's engulfing the red. We have a green day, another green day, right? So I'm not saying that all of them are going to go up all at the same time, but I do feel like they have this unison about them, this synchronicity about them that will allow the sympathy of one to affect the others. So the sympathy of Moderna should affect Johnson & Johnson if this news about the benzene being in the Aveeno and Neutrogen products doesn't withstand going into earnings. Like I said, I expect them to do well during earnings, expect them to release a good, at least something good. I don't know what they're estimated. I don't know what the street is estimating, but essentially the stock right now has entered into phase 4, right? Where you have some type of decline coming down. Let me zoom back in again, sorry. So it went from phase 1, phase 1, phase 1, phase 1, phase 1, going into phase 2. We did a strong phase 2, but just kind of flattened out. Phase 3, now it's entering into phase 4. This is always good for you to do, right? Practice it, try it on your own. When you're looking at the stock, you say, okay, what phase is it in? It's always a good question to ask. Is it in phase 1, phase 2, phase 3, phase 4? This is going into phase 4. It's trading below the 5 EMA. It should test the 20 SMA price. That's going to be a continuation of phase 4. If it breaks down below the 20 SMA price, then we definitely know that, hey, it's going to start trading and go towards the stock price support. That stock price support is around 160. If it holds that 160, maybe it creates a higher low at 164, right? Because remember, we identified the lows before. This is the low, this is the low, this is even a low. But this low that the cursor is on is also support, right? Present day support is support right here, right? So as it's holding support, let's say the stock price starts trading below both moving averages, comes to the support price. Maybe it holds support and bounces. 160 is higher than 156. So that's a higher low. So we start looking to see if this higher low will give us more upside. So I hope that all makes sense. That was a very detailed explanation of Johnson & Johnson. Does this make sense? Yes or no? All right. All right. So now, are there any questions about any stock that you are particularly looking at? Maybe it might be, Apple, right? Apple's doing well. You're probably thinking about getting into Apple. They created a new high, right? We've seen this story before, and they're coming towards earnings. We just want this stock to trade below the 5 EMA price. And so maybe we can get it at the 20 SMA price where it has created support, right? I was trying to buy it before when it made that stock split, and it was going higher, and then it pulled back on me, right? And I said, you know what? I'm gonna wait, hoping that it would, once it waits, I'm like, okay, I can wait and wait for it to hold 115. And I totally forgot. So like, I totally forgot about getting back in on it. Thank you. Thank you. Thank you. I'm glad it makes sense. That's the most important part. I want this to make sense so that if you, let's say that you go to, I'm not a millionaire trader. I will be, but I'm not one currently. But I wanted that whatever I share with you, when you go and you see someone like Tony Zhang, or you see what's her name, Crystal Green, forgot her last name, Crystal, on Instagram, or you go to invest StockTube or InvestTube on Instagram. You see these other stocks to trade: Tim Sykes, Tim Bowen, who are these? Jeff Kellogg. These are really great traders who talk about this all the time. Talk about this same. This is not stuff that I'm just like, hey, I'm just going to share this because I found out some. This is something I didn't find out anything new. I just found out what all the successful traders are trading. And if they're trading this, that means it's good enough for us, right? So I just try to harp on it and keep on sharing and sharing it, and hopefully it sticks. So that when you go to these other websites or you hear someone else talking about the stock market, you already have an idea of like, well, I don't know, I have my reservations because of X, Y, and Z. Maybe they might share something with you, and whatever they share with you, you can be able to add on to it, because that's what this game is about on the stock market. It's not about how much you can make today, it's how much you can continue to capitalize on your gains day in, day out, consistently finding profitable trades, consistently finding profitable setups. Are there any other stocks that anyone is looking at or thinking about, that they want me to look at, analyze? I know one of my favorites has been MOXC, mainly because they're this whole social media, not real estate, retail stock. Retail has been doing well. So this one has just been, or social media retail. So this one has been doing pretty well. But if we look at the Wyckoff method, right, and we look at the technicals behind it, we see, right, it went into phase one. This is all phase one right here. Phase one, phase one, phase one. Right? Yeah, it did. It went up, came down. You can consider this phase two, then this resistance phase three, because it really didn't do anything, but just collapsed, phase four. Bounced, phase one. Phase one, phase one, phase one, phase one, phase one. Entering into phase two, entering into phase two. And even though it pulled back, it still traded above the 5 EMA, continue phase two, but mind you, it was overbought. So if you're buying at any of these times while it was overbought, you're buying it while it's at the high. It's too much, right? You don't want that to happen, because this can happen. Yeah, it can spike. And yeah, you can say, damn, I bought it at $15, it spiked to $24, but you're still risking a whole lot here, because a whole lot can happen when it's overbought and then pull back, right? Trade it sideways. So this pullback is phase four. Trade sideways. This is kind of phase one, kind of going into phase two, but once it hits that resistance, phase three, it pulls back phase four. Kind of phase one, kind of, right? Because it was there for like 1 or 2 days, right? And then it pulled out phase two. Now we're entering into this like phase three kind of concept, where we see the MACD is crossing, we see the RSI is coming off its overbought status, and we see that the TTM Squeeze has turned blue in color, and the histogram's kind of getting smaller, but the stock price is still trading above the 5 EMA. So we know that it closed at $26.31. The 5 EMA is $26.66, right? So, but in the after hours, it was trading at $26.62 and $26.80. So it was trading above where it closed on the after hours, right? So do I know that it's going to retest $29? No, but $29 looked like hell of resistance because it tried here, even with these candlesticks here. Like it wasn't, the body of the candlestick wasn't thick. It was just a small body, right? That's something that you should pay attention to. That means like there was a strong amount of buyers on the day, but they were concentrated at a price at $28 a share, right? You see that here. You have this strong day, right? But the buyers were concentrated around this $28, right around where the previous green day was of buyers, and $27, right? So if this is showing that there's buyers on, coming towards the 5 EMA price, who's to say that there wouldn't be an opportunity for the stock price to try to break above that resistance? Like I'm not going to say that it didn't have the opportunity, but I will say is that it was overbought during that time. And because it was overbought, I would be leaving it alone and wait for it to pull back, give you some retracement, so you have some room to play with on the upside. That's all we're asking on the RSI, that you have some room to play with on the upside. It sucks buying it when the RSI is here and then the stock price, you're like, oh, I missed out on the jump, but the stock price has the opportunity of pulling back. Why risk that downside? Does anyone have any questions? I know we're approaching 4:30. I said I want to make sure that I give you time to go through the day, enjoy your day, right? But as you're enjoying your day, really start looking at these stocks from a different perspective. Look at them from a perspective that says, hey, maybe this stock has some wiggle room because of the RSI. Maybe this stock has some news behind it. Give you a chance to look at whatever news that might be behind it. Go to FinViz. Maybe you see something that says, hey, there's some news on FinViz that shows you, because sometimes FinViz put out more news than regular Google or Yahoo Finance. So maybe you want to go there and kind of check it out. But I put it on QQQ just because QQQ, it measures, right, the S&P. So you get a chance of seeing what the market is looking like, and even take a chance at trading the stock, right? You could trade these stocks because they're very liquid. Well, at least the options, they're very liquid, right? And gives you a chance to really monitor how you want to get in on the trade. But right now, the QQQ just made a new high on Wednesday, right? So we know that it wants to pull back. We know that it wants to start finding some downside. And once it finds some downside, you can find an opportunity for some upside. And I know I didn't really get into the QQQ as much as I wanted to, but I will put it in the group that there's this one trader, Carmine. I know I mentioned him to you before, but Carmine, he really broke down the QQQ in one of his videos yesterday, I believe. And it was like, just as I was thinking about, man, I need to start looking at the QQQ, here he goes breaking it down and really giving a deeper understanding of how to look at the QQQ. And even Crystal, I think she broke down her position on QQQ, because when the market is down, you have other instruments that you can use to make some upside, right? So, and QQQ is one of them. So does anyone have any questions? Is there a stock that you're looking at that you wish you kind of asked me, but I was jibber jabbering away?
I have an AMC put from last week for $35.
AMC puts.
Oh yeah, I haven't really traded the last 5-6 weeks. I said I became a bad ape because, and I went to the hedge funder side because I think if just the hype a little bit went down and there was a $6-7 up from $31 to 37, even 39. And around that time, I made a put, and it's around the. I'm not gain and not lose, but I think the hedge funders want this stock go to zero, or if not zero, at least around this $14 where it was like 2 months ago. I think it's a long run. It will work, but I know it's a hype stock, so maybe not the chart is the most best way to look it. Well, what is your opinion?
No, Andreas, I think you picked a great position on the puts, because if we can look at it, we see that it's following the Wyckoff method to the T. Now here it goes again. Where this is a clean chart, right? As hyped as it might be, it's still very clean. Phase one, phase two, phase three. Even though there was some choppiness here, but it was still all phase three. Couldn't break resistance. If you were buying puts like right around here,
well, it was, I think it was 3-4 days ago when there was almost $31 and probably pre-market, and after went up to 37, even 39, and after probably I hesitated for a couple of hours, and around 36, 37 I bought the put, and now I'm around the same. So I think I bought it in Wednesday or something like that. But I think in the long run it's go down because I just think that's the way to go. But I just wanted to know your opinion. Because
I think it still has some downside.
I also think
even not pre-market, after hours on Friday, as you can tell, I tend to look at the bid and the ask a lot, but you can tell it closed at $34.96, but after hours it went down to $34, and so it's approaching $33. So I think that you have picked a really good stock for a put, and some people would say, oh, but the movie theaters are opening up. Yeah, movie theaters are opening up, but that still doesn't suggest that this stock is worth being $40, $50 a share.
Oh yeah, maximum. That's what I also think, around this 14. And it's more about the hedge funders. They want to lowest possible. And I think if the ape's not unified, and it's hard to unify, then it can happen even in July. So
even in July, because the markets dry up.
I think the next week it will be way more red in many sectors. And I know the AMC is a new animal, but not as new. So I think the strength is not as strong. And the apes also selling, but I know there are not so many science behind what I think. I check it, and probably around Tuesday, Wednesday, that will be the best option to get the gain if I have, because probably Friday is the expiration, and as I saw in the last 2 days, is not really can get more gain.
Yeah, I think you can at least get the $32. I think you have at least that. Once it starts tapping $32, to look to see if it can break down even further. We're looking at the daily chart. Obviously, the momentum on the MACD shows it's all downside. The only reason why I mentioned $32 and start looking at taking your profits is because the TTM squeeze is starting to show some green on the zero line. So if the histograms start becoming like yellow, then that's when we know that support has been created at $32. But
Yes.
as we look at it right now, we go into the smaller time frames, we go to the 4-hour time frame, we see that it is trading below the 200 SMA price, which is good for your position. Once we go to the 1-hour time frame, we see that it's still trading below the
Yes.
200 SMA, right? So you have, and it's still not oversold either, right? And then also, well, let's even show it here. Like even during the pre-market on Thursday,
I think that was the lowest. Yeah.
it went to 30, went to 30, $31.
Yeah.
Yep. So you're right on the ball, right on the money. It's in this strong demand zone of $36 to even echo what you said. If the apes are not unified, the stock price will go down further. So like,
Yeah.
totally with you on this one. I think this is a good
I think the
position.
higher powers will. Yeah. Okay. Thank you so much. I came back after long run. I was in a trip, but now I try to focus more on the stocks, so you will hear from me more often. Thank you, Jerome.
Oh, thank you. And I hope you have fun on your trip.
Yeah, it was nice. Thank you, guys. See you on Monday.
Yes. Definitely. Thank you, Andreas. And thank you for sharing that, because this is like AMC, like he said, once the apes are not unified, this stock is going to, the meme stocks, the meme trades are just going to continue to go down further. And, you can even start looking at GameStop. You can look at BlackBerry. You can look at, well, not Overstock. You can look at, what was the other one? Bed Bath & Beyond, Express, KOS.
KOSS, yes.
You can look at these meme stocks and see that if Reddit doesn't show that
Yeah, we can
buyers are
win
together, then
battles.
it's going to go low.
Yeah, we can win battles, but it takes a week maximum, 3-4 days. But you can see if there are 3, maximum 4 red days. But I'm talking about some of them was like minus 14%. So if you have a good put, you can triple your money easily after 2 days. But yeah, you have to have a stomach, because I was already little bit jump out the position too early, but that's another lesson what you always have to learn and feel it. But the gain is gain, even if it's just 30%. It could have happened double, triple easily. So there was like big 3-4 red days, and the gain is never be that big. Maybe then after 4 days used to be one green day, but you can see the strength at the pre-market.
Exactly. And even before I go to their long-term chart, but I just want to like always sign of caution. I always have the sign of caution when it comes to moving averages coming to a coalesce point. Yep. So like we already went through the Wyckoff method, right? We
Yes.
identify these things, especially now I'm looking on the intraday chart and I'm saying, okay, well, intraday we see, went 2, came down 4, 2, came down 4, right? And then it went up, that was 2, and then it kind of didn't do anything, then went sideways 1, then went back to 2, right? And then it had this incremental decline for 4, right? It's trading below the 200 SMA price, and it tested support, right? It tested support before breaking down. I wanted to highlight that because, I don't make this stuff up. I'm just watching what the market does. Once it makes a high or intraday high, it's going to want to test the 200 SMA price, which it did. Tested the 200 SMA price, came down, tested support, went back up, tested the 200 SMA price, previous intraday resistance, resistance, came down, right? So now that we're going into going into Monday, and we're seeing that this 200 SMA price and the stock price are starting to come close together. Be mindful of what it does during the pre-market, and if there are any news that comes out in the pre-market. If the stock price tests the 200 SMA price and starts trading above it, just know that the $36 price point is resistant. But
Yeah.
you know, looking at the long-term chart, it still shows this bearish engulfing candlestick type of a pattern where there's a red candlestick, green candlestick, red candlestick. So we have a red, green, red. The time I see this,
Yeah, probably there are two red coming, but yeah.
so there might be something growing in there. The momentum is slowing down on the selling part, but it's still coming down towards the zero line on the MACD. So maybe Tuesday, it will continue to go down further. Monday, I am anticipating it testing $32, but definitely expect some intraday volatility on the upside.
Yes.
Going into Monday.
The first 1.5 to 2 hours is probably the most entertaining. I mean, yeah, the first hour and a half, and after probably you can get the lowest or the highest intraday. But I just checking this stock in the last week, maybe 10 days, and didn't dig in other stocks really. I just think that's a good way to go to puts, even if I'm not really proud of it, but the gain is a gain.
No, exactly. Be proud of your puts. Puts,
Yeah.
like, I trust you, like puts are good. There's nothing you need the balance of the bulls and the bears. Like, yeah, I might be bullish all the time, but
Yeah.
all the time I'm still thinking, well, maybe the stock needs to come down. All right. So I thought about buying puts on Peloton. Thought about buying puts on Johnson and Johnson.
Yes.
So it's always good. You know, if you have a anyone who plays tennis, you have a forehand, you should always have a backhand, right? If you play basketball, you should be able to dribble with your left and your right hand, right?
Yes.
There's never just one way. There's always two ways.
And I think overall, this summer is not the best way to really for buying. I think it after September, yes, but I think it's a really tricky month coming, even more so. Yeah, we have to be sure not just push the throttle, but also the brake or just stop.
Yeah. Yep. There are some trickier months ahead of us. August is right around the corner in 13 days. So, these are things like you said, just kind of monitor and is it 13? There's 31 days in July, I believe, right?
Yes.
So when we're coming into into August, it's still going to be, there should be some selling. The market is going to be thin in volume. So I like your approach, Andreas. So yeah, you're thinking ahead. Good job.
Okay, thank you so much. See you guys on Monday in the chat. Bye. Bye.
Thank you, Andreas. And thank you everyone who came in and stopped on by just to get that extra education. We all love this because we're all trying to change not only our current situation, but our future generation situation. So continue, looking at these notes. I will post this video on Tuesday or Wednesday. And I'll also send the video where Carmine mentions the QQQ and how you can be able to break it down for gains, particularly during these slower months. Once we're in these slower months, you want to have something that you can use that's liquid and be able to find some reward. So thank you again. I appreciate you. Thank you, Leon. Appreciate you as well. Thank you, everybody. Thank you, Grace. Thank you, Kia. Thank you, Angie. Thank you for just being here, and Andreas. And thank you for just being here and showing that support. So yeah, now it's time to really get more into our knowledge. So I'll see you in the chat. Have a great Sunday. And thank